go. Most traders don't blow accounts because they can't win. They blow accounts because they don't know how to lose. Let me say something that sounds mad. If you're not losing, you're not trading. Because trading is a probability game. Even the best setups lose and the best entries fail. So the goal is not never lose. The goal is to lose correctly. And if you master this and really put the work in, you'll feel like the market stops controlling your emotions. The real reason people blow accounts. Most traders don't lose and move on. They lose and then turn one loss into 5 mistakes. Here's what usually happens. Your stop loss gets hit. Then you feel discouraged. You move your stop loss. You revenge trade. You double down on your size. Now that's not a trade, is it? You're gambling. And gambling, that doesn't end with small losses. And that's why accounts get blown. Not by just one bad trade, but by one bad reaction. A correct loss is planned, small, boring, and emotionless. And it happens at the exact point your trade idea is wrong. That's the key. A stop loss isn't a pain. Your stop loss getting hit is the market saying that your entry was wrong. And pros, they analyse it and act accordingly. New traders, they take it personal. Pros like data. What is measured is managed. Before you enter, here's the rule that changes everything. So before every trade, you ask yourself 3 questions. Where am I wrong? How much am I willing to pay to find out? And if I'm wrong, what's my next action immediately? Most people only ask, how much can I make? And that's exactly why they stay broke. That's why you're not going to be successful. Position size, the part that nobody wants to do. Let's make this practical. Say you have a $10,000 account, 10,000 euro, 10,000 yen, whatever you bleed and use. You risk 1% per trade. That means your max loss for the day is 100 euro, yen, whatever. Now you find a setup and your stop loss is 20 cents away. That's it. That's the math. It's not that complicated. Now you can find the setup and your stop loss is 20 cents away. So your size is $100 or euro or whatever divided by 0.20. And that could equal 500 shares. It just depends on what you're trading and how much the shares would be if we're talking about stocks. And that's it. That's the maths. It's not that complicated. This is how you stop guessing and start trading like an operator. And yeah, this is the part that people skip because discipline isn't exciting, but it keeps you in the game long enough to get good. The 3 ways traders lose wrong. Number 1, moving your stop. You planned it for a reason. Moving it means you're admitting that you don't really know what's going on. You don't know why you're in that trade. 2, averaging down because you think it's going to do a reversal. The market, it doesn't care what you think is going to happen. If you increase your size while the market is proving you wrong, you're not confident. You're being emotional. Number 3, revenge trading. This is the silent killer that will blow your account quicker than anything. You're not trading your setup anymore. You're trading your mood and your emotions. And to be honest, emotions don't have an edge. They don't give you that advantage in the markets. The correct mindset to have. Losses are just little expenses. Here's how you should reframe it. A loss isn't a failure. A loss is like a tuition fee. You're paying the market a small amount to learn something, but only if you keep it small. Because there is 2 types of tuition. Cheap tuition, the most you want to lose, and a life running tuition. No stop, oversized and emotional. When you lose correctly, something magical happens. You stay confident because you didn't break your rules. Your goal becomes, I don't need to be right. I just need to be consistent. That's it. That's it. It's that simple. The stop loss hit routine. This is what I want you to do every time your stop loss gets hit. Step 1, say it out loud. That was a nice loss. And yeah, even if it does hurt, even if it stings just a little bit because you followed your plan. Step 2, no immediate re-entry. Give yourself a rule like wait 2 minutes or wait for the next candle to close or wait for a new setup confirmation. Journal 1 sentence. Not an essay, just 1 sentence. Stopped because look at what happened then after. And that's how you build pattern recognition. Check your state. Ask yourself, am I calm or am I just trying to take a trade just to take a trade? And if you're just taking a trade to take a trade, then you're done. Finish for the day. Walk away from the charts. The challenge. Here's your assignment for this lesson. For your next 20 trades, risk smaller than you want to. Do 0.5% of your account size. And the goal is not profit. The goal is perfect losses. If you can't lose correctly at 0.5%, you won't be able to lose correctly at 2%. Master losing small, and the wins will finally have a chance to matter. So remember this, right? Profitable traders aren't shitting themselves every time they take a trade. They're just not attached. They don't need the market to agree with them. They just need to follow the plan. Because in trading, you're not paid for being right. You're paid for being disciplined.